We're back to meme stocks. Is the news of
2021
the day.
all over again.
It's 2021 all over again, and I got to tell you, we've seen some real stuff in the last few days here. That, by the way, doesn't necessarily if I know we make the joke like the meme stocks are back, the Fed's got a hike. There's not really a huge correlation actually between when things get memey and when markets top. Remember, the GameStop stuff was going on in January of 21. Markets didn't top for 12 months after that. It was late 21, early 22 when they finally did. So this week, you've got a couple of things that are going parabolic. And then, again, usually when things go parabolic up, they don't just correct flat on the way down. The first one is Open Door Technologies, who, got to be honest, earlier this week, had to look up what they did because I had absolutely no idea what it is. From their Wikipedia page, headquartered in San Francisco, it makes instant cash offers on homes through an online process, makes repairs on the properties it purchases, and relists them for sale.
Sounds like the Zillow algorithm thing.
It does, and it's performed just like that, too. Their net income was negative $392 million last year, and generally they are not particularly profitable. So, again, your mileage may vary on all of this, but ultimately, when you look at Open Door, the fact that their stock went from, 50 cents a share up to $4.97 a share in a span of 3 weeks, not really indicative of, hey, there's this great, long-term thing here. It's just kind of messy and ugly. You then have Kohl's, which was up a whole bunch yesterday pre-market before giving a lot of that away. And here's the thing. You got GoPro and Krispy Kreme are going nutty today. And it's these companies don't have anything in common other than they basically have to be cheap enough on a per-share basis and thinly enough traded that a whole bunch of
or could be heavily shorted. That's sort of the target of this.
But a whole bunch of internet monkeys go and pile in, and they're like, hey, look what we can do. And here's the thing: I'm not poo-pooing the internet monkeys for a couple of reasons. The first is they're actually kind of right in a lot of cases. They've actually nailed some things if they timed it right. Obviously, it can end very badly if you then went and bought Open Door at $4.97. And it's sitting here today at $2.20. Losing 60% of your value in 2 days doesn't feel great, I'm sure. But the early monkeys, they can be right about these things, so I'm not going to poo-poo them too much. Beyond that, I think there's something interesting, and this is not my own original idea, so I'm not going to claim credit for it. But we've seen this slowdown in the labor market for college grads in the last couple of years, where the unemployment rate for college grads is higher than the broad unemployment rate as a whole. And someone made the point, look, back in 2010, 2011, if you were a college grad and you were unemployed, you might try a couple things. You might drive for Uber or something like that, or Uber had just come out in 2010. Or you might go and say, hey, you know what, I'm going to go back to grad school and I'm going to spend a bunch of money trying to, level up my education. And maybe today's college grads, hey, they're not doing that. They're just putting a bunch of money into gambly things because it's so easy to do now and hoping it pays off that way because the ROI on education doesn't look as good as it used to them. So I find that to be kind of an interesting idea to kick around on this because look, it's not low interest rates that's spurring this. Interest rates are, in the fours. And so I think the question is, why is this happening now? And the things that I get to are, hey, this is a market that has been, feverishly just kind of moving up for the last couple months, and people are just looking for that next thing. And maybe there are some people that are just, on the sidelines of their life kind of saying, hey, things aren't working out for me. Maybe I've got to gamble on this. I'm not saying that's healthy in the long run, but I guess I could understand the impulse if I were in that situation.